All right, what's happening, guys? Welcome to our July 15th edition of This Week in Crypto. We'll be going over the latest metrics in crypto for the next hour to hour and a half or so, and try to answer all of your pressing questions about where the markets currently stand. We've had some pretty positive movement, as our thumbnail and caption suggest, over the past week, especially just in the past couple days. And it may not have looked like a huge nudge forward, but what we did like to see was crypto be able to rebound a bit despite equities staying flat, especially yesterday and the day before. Ethereum going back over 1,200, Bitcoin going back above 20K, where it still is now. And equities kind of staying in the mud a little bit. They have risen today along with crypto a little bit, but it is good to see that there's just that slight chink in the armor of the correlation breaking a little bit, which is something we've been waiting on all year long. We would, of course, need to see just a little more consistency in the break, but overall, we haven't seen even a couple days like this in quite some time. So it is worth getting a little bit interested in this kind of correlation break right now. And we'll talk about exactly what we can make of it through our numbers here and look through our top metrics as we always do. As always, before I get started, I'd like to remind everyone that our goal is to give objective analysis on where the metrics are pointing to markets heading next, without ever getting into the realm of investment advice. That's not what we do here. We are simply here to report based on previous divergences that look similar to what we're seeing now, exactly what has happened in the past and what we can expect based on that. So keep that in mind, and let's look into the screener a little bit and find out exactly what's been up. Bitcoin actually down 2%, while Ethereum up just under a percentage right now. And then we had a few big upticks from projects like Matic, like Uniswap, like ICP to an extent. And then check out Aave and Quant really took off. Quant back over $100 for the first time in quite some time. So that's cool to see. Arweave also had a nice week, as well as Curve DAO token. Now, on top of these up and down returns that we see amongst the top 100 market cap assets here, we can also see that the social volume for Bitcoin and Ethereum have both essentially doubled compared to the week before. Ethereum much more than doubled. Ethereum about right on point of twice as much social volume and discussion as we saw in the week prior. And we'll get into that a little bit later as to what that means, and especially seeing the percentage of discussions related to the top two assets really rising, why we think that's a really good sign. We can see stable coins continue to also be discussed less, and that is a good sign in our opinion too, because usually, when you talk about Tether and USDC, there is less and less discussion, or I'm sorry, more and more discussion when there's some controversy or a lack of trust in keeping your assets in those dollar pegged assets and are basically safe havens while people are not confident in the markets. So them being talked about less means things are likely, at least in the crowd's eyes, becoming a little more normal again in terms of being able to hold these assets comfortably. You can see BNB also up considerably. XRP had a big jump. Uniswap, big jump in social volume. So there's actually beginning to be a little more interest in a lot of these assets right now, and that is generally a good thing to see. All right, and by the way, is Maxim with us right now? Probably not. He may jump in a little bit, but I will be going through all of our top metrics here while we await him. And if it's just me, it's just me. But feel free to drop your questions at any time. Request some assets.
We might have lost Brian. 1 second.
I'm back. Can you hear me? Yep. That was strange. Yep. I don't know what happened. If it happens again, sorry guys. I think my call just disconnected. But anyways, let me make sure my screen is shared once again, and I'm going to get right into the correlation between crypto and equities right now. Can you verify that my screen is showing once again? Yep. How's it looking now? All right, we're back, folks. Thanks for the patience. So, as I was saying, there was a nice break in the correlation, especially yesterday and even the day before. You can see that crypto is way down at about 19.1, Bitcoin specifically, I should say. And then it made this big rebound here all the way up to 20.3, despite equities here, the S&P 500 here in teal, not really moving. In fact, it moved down while Bitcoin moved up. And usually when that happens, we'll see some makeup by the equities the next day. And that didn't happen. We actually saw Bitcoin, retrace a little bit and then pop back up once again on another day that equities moved down. So yes, crypto and equities moved down together the first 4 days, but then Bitcoin really came roaring back and has rebounded just in the past, looks like 48 hours. Bitcoin's up 9%, while the S&P in that same time frame is only up 0.5%. So that to me is a correlation break in something we should really be keeping an eye on. Gold also continues to fall, by the way. It's really struggled. If we zoom out here to the last 6 months, we can see that they've all remained looking pretty tight on the outside, but we know that Bitcoin on a very zoomed in scale has rebounded quite a bit more. So that's what we want to see. And obviously equities are up a bit today. Bitcoin is also up today. So we could be snapping back in slightly, but generally, if we start to see no correlation between Bitcoin and the S&P, if the S&P goes down and Bitcoin stays flat, that qualifies if there's inverse relationship. As long as that doesn't last too long and you don't really see a dependency between the two, that's usually a good sign. And most of the bull runs historically for Bitcoin have happened when there is just zero reliance one way or another. I'm just going to zoom out way back and we can take a look at some of the examples really quick. So here, for example, we see Bitcoin way back in 2017, really roaring up. The S&P, yes, was also going up, But notice how Bitcoin retraced here, maybe a month and a half before the S&P had any sort of drop, and then the S&P kept going up while Bitcoin was actually veering down, and then eventually, like we see another big break here where the S&P continued to go up, Bitcoin went down. This was Black Thursday, where we had the big drop thanks to the initial mainstream discovery of COVID. And then we saw this huge rip upwards, volatility, more climb here. And there were several points. This is so zoomed out. It kind of looks like the S&P and Bitcoin were just going up, but there were a lot of points here where Bitcoin was really charging up at a much more enhanced degree compared to the S&P. And yeah, it's not a bad sign where we're at now. Obviously, prices have dropped a lot, and there's a lot of factors that go into when prices are going to rise again that go far beyond just how equities and real world companies are performing. But overall, we like to see that Bitcoin can at least have a 48-hour, 72-hour climb without any dependence on the S&P 500. So moving on, let's take a look at some of Bitcoin's top metrics now, as we always do. And we will probably look at some other top assets as well. I wanted to look at Quant as a kind of a window for one of the leading altcoins over the past week and figure out exactly why it might be pumping. So that's one I was going to check out with you guys. And of course, as mentioned, have some altcoin suggestions ready so we can look at those as well. So here we are looking at Bitcoin's circulation over the past 6 months or so. And obviously plenty of choppiness. We had this huge pump in circulation last month that correlated with the downswing in mid-June. And ever since it started to quiet up again, you can see the 30-day trend line has been climbing long-term, but over the past few days, it's starting to drop a bit. To give you an idea of the divergence between the amount of circulated tokens and the price of Bitcoin as we speak, we had been on quite a tear with semi-bullish and bullish signals firing off. And then this month, we're actually in neutral territory right now. We'd like to see just a little bit more of a pickup on the circulation end. So right now, this decline is what's keeping it neutral. But because the prices have been dropped so much in the past 8 months or so since the all-time high in November, that's why we've seen this bullish divergence form. And in a vacuum, as long as we're seeing yellow, green, and green, that's when we tend to see these big rips in price. So really just being patient and awaiting the result of such a long-term bullish divergence is what we need to really be doing right now. That said, we don't love that it's turned back to neutral. We'd like to see that it continues kind of a yellow-green to green color right here. As we can see, though, we just want to avoid the red portions where there's just a big decline in prices due to just a tremendous lack of circulation. And then on the Ethereum too, while we're here, a little more topsy-turvy. We saw just a couple months of bullishness followed by immediate bearishness once again back now in July. And this is a case where Ethereum just has not been getting quite as much movement as Bitcoin. It's especially since the retrace that it's had since November. There has been quite a bit of fear and freezing up from Ethereum traders. Fees, by the way, are no longer a factor. I can show that really quick on the Ethereum side. At least for now, they have really fallen to make any transactions on the Ethereum network. The cheapest they've been in, I believe, 3 years. Just about, give or take. It's kind of matched what's been going on in late 2020. But if it surpassed that, which I believe it has, then the last time we really saw fees below $1 consistently was in late 2019. So that's great to see. You can also look at the average amount of gas used in Gwei. and that's been dropping significantly too, at least back to last year's levels. So as far as transactions go, because these fees and the gas used is kind of supply and demand related, as long as there is less utilization of Ethereum, the fees are going to stay low until people get excited about it again, and there will be a time when they do. But for now, if you want to make transactions, you're doing so with very little resistance on the network. All right, moving back here to the Bitcoin chart. So daily active addresses. The amount of unique addresses interacting on the network continues to fall. It's kind of been plummeting since mid-May. So we're kind of on a 2-month stretch of decline for the amount of unique addresses interacting right now. Obviously not as good of an outlook as NVT. If we had a model that measured daily active addresses the same way as circulation, we would likely be looking semi-bearish right now. So not the greatest here in July. And combine that with a neutral outlook for circulation, we're a little hesitant due to the amount of activity going on the network right now. Moving on to MVRV. So I have both the 30-day up as well as the 365-day up to give a picture of both the midterm and long-term outlooks on as far as how average trading returns are looking right now. So I'm going to draw a line here, as I typically do on the MVRV segment of our show. I'm going to full screen it once again, draw 15% here, and then negative 15% is going to be right there. So this is specifically for the pink line right now, folks. Anytime the 30-day MVRV crosses this line, that typically is going to lead to a top based on history. The vast majority of the time, that's where we see a lot of corrections take place. Sometimes it doesn't have to go that far to see a big decline, as we saw here back in late March. And then on the other end of the spectrum, when we're in negative territory, crossing the negative 15% line, that's typically when we see bottoms, and it's a very good historical time to accumulate, or we can at least expect that bleeding tends to stop once we cross and things go flat once again, and then anything can happen once it neutralizes. That happened both here in May as well as last month, just about 30 days ago to the day. So the midterm MVRV right now is looking so-so because recently it actually crossed back above neutral, and the average trading returns for the last 30 days on the Bitcoin network is at about 2.5%. Anything below zero would be less risk than usual. Anything above is more risk than usual. That said, this is much more close to just a neutral output than something that would be in danger territory up here at the plus 15% or beyond territory. So the 30-day MVRV is about as even as we typically see, but the 365-day tells another story. I'll take these off now, and we can take a look at how this looks compared to history. I'll go back to, let's just do the last 5 years here, 6 years. Take this one off as well. Does not want to go off at the moment. That's fine. Ignore the gray line. When we look at the red MVRV ratio, this is now resembling the average trading returns of the addresses that have transacted in the past year. And just as we saw with the 30-day MVRV, typically super high spikes are the ones we have to be concerned about. Super low spikes are the ones to get excited about. If we had to select a territory where it's like an extreme, I've seen right around negative 35% and positive 35% being around the time where we really start to see a big rip one way or another. So if I mark 35 here, so this would be, all of this would be around the danger zone. And yes, we saw, it go massively above that here and even here. But this one was a really good indication that we were getting close to a top. This was the October and then November all-time highs here. And as soon as it went above, it was really starting to look toppy. And like I said, below negative 35% here, November 2018, this was a very solid bottom signal. And then look where we're at now as of last month. So the past 30 days, we've actually fallen way below the negative 35% territory, currently sitting at negative 43%, which if we look at the past 6 years, this is the second lowest we've really been. The only time we got below that was right after the major fireworks that happened in late 27 and 2018. And by the end of 2018, people were about as low as I had ever seen people be on Bitcoin and crypto in general. And that was where we started to see some flattening out, a little bit of a waiting period, and then that initial rip that started to get people very excited about Bitcoin once again. So will we see a similar pattern? Will it be a few months more of just flat performance and then a gradual rise? Or will it suddenly just rip up or maybe even go down a little bit more? But all things considered, prices don't go down too much further once they're at this territory for the long-term MVRV range. So midterm is looking pretty neutral. Long-term is looking very bullish for MVRV. We can also take a look at what all of the timeframes look like combined. And this is Bitcoin right here. Obviously, with the past 30 days actually being pretty decent, we've seen that they've actually started to get some positive movement, whereas the 90-day, 180-day, and 365-day MVRV is still well underwater. So when you combine all those timeframes together, we're getting mostly a neutral signal right now, with a little bit of positive bias showing that there could be a little bit of underbought signal going on. Not a lot, because we need the short-term returns to slow down a little bit. But, all things considered, this is not bad to see at all. And if we look at Ethereum, it's looking just about the same. They're about dead even, because Ethereum's actually outperformed Bitcoin over the past week, and I think even over the past month. I want to check on that. So if I change to 30 days here on the screener, yeah, so Bitcoin's actually down 3.5% in the past 30 days, while Ethereum's up a little over 6.5%. That's a pretty big swing. And, by the way, you can see just how well a lot of altcoins have performed. It may not always seem like that, but on the 30-day time frame, Matic has really rebounded huge, Uniswap as well, Quant over double what it was 30 days ago. Terra USD, interestingly, is continuing to try to fight back toward being a stable coin once again, but even though it's up 533%, it's still at just 4.6 cents when it used to be pegged at $1. So that just gives you some perspective on what's been going on over the past 30 days and why a lot of these 30-day lines here are showing kind of a bit of an overbought signal, because there's already been such a strong performance from them. But all things considered, we still see plenty of altcoins, when combining all of the timeframes together, are showing a bit of a semi-underbought territories. Unised Leo, the Graph, XRP, OMG, Scale, Loopring, Phantom, Engine, Decentraland, and Chiliz, among others, are showing some pretty nice signals that there could still be some meat on the bone for some further upside if and when there presents that opportunity for altcoins to have that window to grow once again. It's all, as usual, going to depend on Bitcoin staying relatively stable and not continuing to chop and throw altcoins down with it. So that's a little on MVRV. Let's move on now to a little bit of age consumed. We've touched on this metric a little bit throughout the year. It's not the most exciting this year. We saw a lot more movement historically, but let's zoom into just the last 6 months and see what kind of spikes are going on. It doesn't look like many at all. The last big spike we saw was just about a month ago, on the tail end of this huge drop here in June. And what this really means is there are some dormant tokens that are being moved. It's basically combining the time in which they have spent sitting dormant multiplied by the amount of tokens that are being moved. And the bigger the spike, the more likely there could be a huge price direction swing. But we haven't really seen anything significant lately. Sometimes this will be more evident when we look at some altcoins. So we'll try to see if there might be some age-consumed spikes there when we take some of your requests. But for Bitcoin, dormant tokens continue to mostly just be continuing to be dormant. And we can see that confirmed here on the mean dollar invested age chart, where it's been mostly just a rip up in days, where the average amount of days that investments have been sitting in the same wallet is up to about 382 days, when a year ago it was at 272. If we go back historically, we'll look at the last 6 years once again. So the bull runs typically occur when this slope starts to go downwards. And we saw it very evident in late 2016. That was when the price of Bitcoin was only $740. It ended up ripping all the way up to, of course, a little over 19K. And during that time, the price of Bitcoin, while this slope was going down, was about a little over 2,100%. And then once this slope began to stop, that's exactly when Bitcoin's top came in and the reversal began. And then the slopes, the line started going up again right until about here. And this would have been our confirmation that another bull run could be starting. It was more of a short-term one. It flattened out here once again, and notice that that was kind of its last hurrah in trying to bounce before another big bear run commenced. And even though there was a bit of a rebound, we didn't really get confirmation from this mean dollar invested age curve until right about here in mid-October of 2020. This was about 7 months after Black Thursday occurred. And as soon as this slope started going down, look at how dormant tokens were just absolutely taken off. And we eventually hit that all-time high then in April. The slope stopped once again right about here, and then the price declined with it. We didn't really, this is interesting, even though we saw a huge bounce and an eventual new all-time high in November, we didn't really see any confirmation of major dormant tokens moving. Maybe just a slight argument for it. If you were watching the mean dollar invested age slope here, this would be a very good sign that we have a little more meat, but it didn't last long, and it started to move up pretty consistently by mid-November, and it's moved up ever since. So it doesn't matter whether this line ends up crossing above this or above this. It's really all about just direction. And if the mean dollar invested age is not moving down, it's a concern. If it's flat, if it starts to flatten out, that's a good sign that a direction change might be in order, but we haven't really seen that yet. If we zoom in a little bit, yeah, there's not really anything. We look for, at least a couple days like this where it's starting to flatten out, but I think that anything less than a week of flattening out is kind of just an anomaly and nothing to really get too excited about. But look for, whether it's going to cross 400 days or not, I'm not sure, but look for any sort of like midterm tapering off on this upward slope as a sign that some dormant tokens are starting to get moving and grooving once again. I will come back to this one momentarily and look at both Bitcoin and Ethereum together. I'll touch on whale transactions in just a moment, but first let's look at what whale supply is looking like right now. This is our 100 to 10,000 Bitcoin address supply distribution chart. And we're seeing just how much of the supply these key whales are holding at any given time. As we can see over the past 3 months, let me go back to a full year or so for now. So over the last year, we saw a climb early on here in July where their supply in Bitcoin grew to just under 50% and peaked in late October 2021. But since that time, things have really moved down. They have been dumping their Bitcoin pretty aggressively and now own almost 3% less than they did in late October. That is a ton, several billions of dollars, obviously. And with that, the price has gone down ever since they started dumping about 67%. Even though there was an all-time high here, it was on very unstable footing due to the fact that whales were already dropping off. We would like to see a bit more accumulation going on, obviously, and we've seen hints of it, here in late June, and even just the last couple days, just a little bit of a rise. But overall, even just since last month, it's continued to decline as Bitcoin came down from 30K and eventually moved all the way down at one point to the 17Ks and is now back just north of 20K again. So at least for now, if we look at the past week, there's been a very slight downtick, but it isn't an aggressive one by any means. And things could definitely go either way. I'd call this more neutral, if not still a little semi-bearish from here, because the price has declined a little and whales arguably have declined a little bit more than that. So yeah, that's Bitcoin's whales. We can even look at like the 10K to 100K because there are the occasional active traders in these tiers, but it is going to be mostly exchange addresses. And from what I'm seeing, it's mostly just chopping up and down. You can see a lot of volatility in this line, of course, as exchange addresses very often show. But it's pretty much sitting in neutral right now. If we go back just a little bit, okay, we're already in the last year, never mind. So yeah, we're pretty much in the same spot we were at a year ago. They were holding 11.4% then, and they're at about 11.2% now. So, it would be a nice consolation prize if we continue to see a rise like this. But this big drop here about a month ago kind of nullified that hope. And, now we're kind of just waiting and seeing if the whales can get active again. Now, I mentioned the whale transactions to see if there might be anything going on other than just their supply distribution moving. And the answer is not really. It's not really showing any sign of concern or any sign of huge optimism of a potential breakout right now. It continues to look like the amount of 100K plus transactions are falling over time. And until that changes, it means that the whales aren't really showing a ton of interest either way. They're kind of content with the amount that they've dumped since October, and they're awaiting some sign that Bitcoin may have some legs to it in order to accumulate once again, or even, just react to a big drop like this. This kind of thing is normal. Sometimes it might resemble a turnaround, but oftentimes on a big drop, it's just because they are sticking to their routine plan, or they had some limit orders filled that were over 100 grand in value as a result of the price dropping as much as it did. But it didn't necessarily mean that they were aggressively accumulating beyond the normal amount. So that's it for whales right now. I mentioned the ratio. Actually, before I do that, let's take a look at the dominance and volume for Bitcoin. So the percentage of discussion related to Bitcoin can very often play a big factor. And we saw a massive spike right here just about 5 days ago at the beginning end of this week. And the dominance, the percentage of discussion related to Bitcoin ballooned all the way up above 32%. And that was the first time that happened in quite some time. Let's go back to 2020. It looks like it was a year high. And if we go all the way back, yeah, it looks like we had a very mini one here about a year ago in June. And then here we saw a ton in the early part of 2021 and latter part of 2020. And you can see that when dominance was really high, I'll even mark the 30% plus line here. So that's 30% or above. Usually when dominance is above 30%, it's a very solid sign that Bitcoin can rise. And we saw clear evidence of that here. We saw it here as well. Even here, Bitcoin was rebounding a little bit as they started to be discussed, as the number one asset started to be discussed a little bit more after the May decline from 2021. And now just recently, it's peaked back above. And that is nice to see, because it means that the discussions related to altcoins and S coins are much less frequent than they used to be. You know, the Dogecoins and the Shibas and obviously Terra, those aren't really something that people are being too attuned to at the moment. They want to know that Bitcoin can regain its stability and perhaps get back to 30K and then focus on you know, exploring some altcoins and making some optimistic plays in the market. So overall, social dominance recently reaching above 30 was a very good sign. It's still well above 20%, which is kind of like the minimal health line that we like to look at. And it's been that way for about 2 weeks now. Ever since late June, we've stayed above there for about 2.5 weeks, it looks like. And that's nice to see because it means that there's a lot more focus on what really should matter when it comes to what's propping up crypto markets at large. All right, now we'll look at that ratio of transactions in profit versus in loss. So we'll go back to the last year, give some context, and some seriously interesting signs going on right now. The blue line is the ratio in profit and for Bitcoin, that is, and the pink magenta line is the ratio in profit to loss for Ethereum. And Bitcoin is right around neutral still. We look at the 1.0 line, which would be right here. So anything above that is kind of an extreme amount. Let me make sure they're sharing. So that's, let me take it back. That's the Ethereum line, and then the line for Bitcoin. No, I take it back. They are using the same axis. So you can see the line, the two numbers are parallel to each other. So the 0% line is shared with both, and the axis is the same. When you see the ratio get above here, that's a sign that we're an extreme case of a lot of profits happening without a lot of you know, people capitulating, and that's when prices typically top. You can see very clearly Bitcoin, even though it didn't get above this 1.0 line, it still was very high, and prices dropped. Ethereum did get above, and I can guarantee that Ethereum dropped a little bit more than Bitcoin's price here. Same with here, you can see Ethereum way back in early November had this huge, massive spike, its largest in the last year. And a week later, it saw its big all-time high and then a huge drop. But look for Bitcoin to really see a huge number in order for markets to start looking toppy. And right now, that's not the case. It's sitting right around neutral. So all is pretty good there. Ethereum, on the other hand, obviously it's ripped pretty well in the past week, especially the last month, at being up almost 8%. It's not a surprise to see this big bar, but this is the early part of the week, and really the last few weeks here didn't really show anything too significant in either direction. We'd really love to see if there was a lot of capitulation and transactions happening at a loss. Those can very well be bottom signals in times where the markets are able to jump up a little bit. But right now, it's looking pretty neutral for Bitcoin and a little bit concerning for Ethereum. Okay, we went over NVT, MVRV. Quick look at funding rates, guys. So we're seeing that funding rates are actually pretty remarkably neutral right now. This blue line here is the representation of the average funding rate of Bitcoin for the perpetual contract funding rate on average exchanges. We combine a few different ones to see whether it's super long or super short right now. And right now it's neither. It's sitting right at about neutral. Same with altcoins. There was some shorting going on for the past 48 hours, but the average altcoin funding rate has gradually moved its way back to about even where it sits right now. And until that changes, it means that people aren't being overly greedy or overly fearful at the moment. And that means that prices can really break either way as we head into the weekend here. If we look at a few key assets, we can see that Axie Infinity is seeing a negative funding rate. Bancor, Flow, it looks like Matic, NEM, Serum, Storage, Synthetics, and Waves among a few of the assets that are seeing some significant shorts. The one high funding rate I see here would be Dent, but overall it's a lot of neutral funding rates right now. So that's where we're at for funding rates. We talked about MVRV, whale transactions, just to see if there's anything going on here. We do see a huge spike in Uniswap, at least on the projected line. The model is saying that there's been a tremendous amount of Uniswap transactions. So let's explore that really quick. Okay, so this makes sense. Let's just take a look at the last 3 months. So yeah, we just saw yesterday our biggest spike in about a little over 2 months. And then zooming in a little more, if we just look at the last week and we take a look at 4-hour intervals. So this may not look like much, but because we're not even halfway through a 4-hour bar right now, the model is projecting that it's going to end up way up here, which would be a very high spike. So there seems to be quite a bit of action going on at the moment for Uniswap. And if we look more on like the 6-month perspective, we can see why. It does look like obviously Uniswap has been rising quite a bit. So this could be a concerning sign actually that some whales are taking a little profit because Uniswap has decoupled from Bitcoin and a lot of other altcoins over the past week. So I'd call it more of a red flag than a green flag at the moment, but we'll wait and see if the whale transactions really start to clump up like we see here for an extended period of time. Sometimes an isolated spike may not mean much, even though this was a pretty good sign that they were taking profit. But that's interesting to see. Let's see if there are any other assets getting some massive whale transactions. So nothing quite as big as Uniswap, which is very close to a 3-month high right now on the projection scale. Binance USD is seeing a tremendous amount of stablecoin whale transactions. That's probably a good sign more than bad. When we see a ton of whale movement on the stablecoin side, it's usually for the purpose of adding more buying power on exchanges. Dogecoin is slightly up there, FTX token slightly up there, USD coin. So that's a second stable coin showing higher than average whale activity. Where's Tether? Yeah, Tether isn't showing anything special at the moment. But yeah, it looks like Uniswap is leading the way in terms of some anomaly whale action right now. So that's a good asset to be tracking in terms of some upcoming volatility that's likely going to be occurring. Okay, I think we're 42 after the hour right now. It's a good time for us to take a few questions, and I'd love to answer any pressing questions you guys may have about the markets.
So far, we had a suggestion for Cardano, ADA.
Mm-hmm. Any others? Okay. So let's see what's going on for Cardano right now. The circulation for Cardano is pretty flat at the moment. It doesn't look like there's been a huge amount of growth in either direction over the past 6 months. Yeah, but on the other hand, daily active addresses is looking abysmal. It's very, very much dead compared to how it was back in the early part of 2022. We saw a high spike here on January 20th of about 286,000 daily active addresses. We switch this to 1 day. The price needs to be 1 day. That'll help. Okay, so yeah, about 286K in mid-January, and where it is now is all the way down to about 46K. I guess the latest full day we have is showing about 75K. Either way, almost a 75% drop in daily active addresses over the past 6 months. You can see the smooth moving average line here in red continues to decline. So that's not great to see. We'd like to see at least some flat performance for the utility types of metrics like circulation and daily active addresses, or a slight rise. And we're just seeing a free fall. If we zoom out a little bit, we can see where all of the daily active addresses really clumped up here, pretty much since the very start of January of 2021, and starting to decline here in the all-time high month for a lot of assets. This was actually already a couple months after the all-time high for Cardano, but November 2021 is where things peaked, as a lot of Cardano hopefuls were likely buying the dip here, but it didn't really work out due to Bitcoin and Ethereum really free falling after November 10th or so. And you can see that the smooth moving average line, after lagging behind these big spikes a little, has really been declining since mid-March. So utility is not looking good for Cardano. This is definitely bearish. On the MVRV side, let's see if it's looking any better. I'm going to zoom back into the last 6 months. Cardano's 30-day MVRV is slightly in the negative territory, which is good to see. We can just quickly place the negative 15% line there. So it's not in any sort of opportunity zone like we were seeing here in mid-May, where the price was able to bounce nicely until it got out of the opportunity zone. But it is below 0%, so in a vacuum, there is less risk of entering into a Cardano position than usual. It's been in that state, though, for about a month now, and there hasn't been any positive movement, but also not a serious decline, at least compared to what we were seeing toward the beginning of the year. So MVRV is working correctly, and not basically the price is not hemorrhaging as much as it usually would when it's in positive territory, like right here. And on the longer term scale, let's see what's going on. So the 365-day MVRV continues to look very low, just as we saw for Bitcoin. It's not quite at its lowest point in the year, which happened in mid-May, going all the way down to negative 63%. But sitting at negative 57, it's pretty much right there. And if we look historically at where the lowest points were, so we went super low in December of 2018. That was as low as it ever got. I wouldn't necessarily just wait for it to approach, the negative 80% and beyond line before, adding onto your positions or anything. I mean, anything can really happen. But like I said, in a vacuum, that's a common phrase I like to use because it's a good way of looking at it. Under normal circumstances, you want to be in positions more when we're in serious negative territory. And really, if you combine this whole stretch of the last couple of months together, this is the lowest we've really seen the 1-year MVRV in over 3 years, going back to March of 2019. So, it's certainly hard to just catch a falling knife. But when you see that historical MVRVs are getting this low, it means that we at least can't drop too much further without a little bit of solace and a little bit of average trading returns going back into positive territory. because no matter what time frame we look at for MVRV, this is going to be a zero-sum game that fluctuates right around 0%. And we've been in negative territory for the 1-year MVRV since November now, going on almost 8 months. H consumed, we did see a big spike here. This happened back in late April, so it has been almost 3 months now. But it did show that there were a ton of dormant tokens moving, and it looks like it happened on a toppy type of movement, which meant that dormant tokens were likely dumping their coins and moving to fresh new addresses. If it was whale activity, which there likely was some there, they weren't doing it with the intention of accumulating. And we can verify that by looking at our supply distribution chart. Let's take a look at what whales are doing. The price is at 43 cents. So we'll start looking at the 10K, 100K, and 1 million here. And we'll just look at the last year for now. So the 10K to 100K, the smallest of the three, they've actually started to accumulate pretty aggressively ever since last month. And we can see there has been a decent amount of alpha. They were definitely dumping as the price was rising here. So they didn't do a very good job of predicting. It looks like the 1 million to 10 million were the most accurate in terms of dumping, accumulating and dumping. In fact, I see just based on how the three lines fluctuate that the gold line is by far the most predictive. But there's some elements of like the pink line as well, seeing some accumulation on the dips and then some drops near the tops here. I'm going to look at just the gold line though. I think the 1 million to 10 million coin addresses are showing some promising signs in terms of where the price will go next, going all the way back to last year when they were really accumulating on the way up, and then they perfectly timed the dump. Even though there was one more jump here, like they really started to get out just as it was peaking above $3 for a moment, and they were dumping pretty much ever since. A little bit of accumulation here, but they quickly changed their minds and really started to drop. This was a good sign right here in March, where they were accumulating prior to this big top here, and as prices started to decline, they quickly got back out, probably took a little bit of profit there, accumulated here once again, and then this big drop about a month ago kind of solidified that they aren't too interested in having a ton of Cardano in their wallets. And we are sitting at a 1-year low right now in terms of what these whales are holding, just a bit above 16.5% when they peaked at a little over 22.5%. Going back historically, if we look since 2018 or so, yeah, I mean they've mostly been just distributing over time, and there might be another time where they start to accumulate, like we saw just prior to this huge rise. That's what you'd want to see. They kind of told the story that something was brewing here back in July of 2021. But until they start to show a big spike like that, I'd be a little weary with this key whale tier continuing to dump their Cardano. See if there's anything else we can show off here on the Cardano end. We talked age consumed already, daily active addresses. Network realized profit loss could have something interesting there. We are really only seeing losses recorded, which makes sense with the price declining. Since early April, it's dropped about 64%. That's obviously massive. So all of these negative spikes are recorded realized losses amounting on the network. What you don't want to see are these positive spikes here or here. That would indicate that there's a lot of profit taking happening, but obviously there hasn't really been much opportunity for profit taking, and that's why it's nothing but losses. Usually it's a good sign if you're seeing only losses being realized, and eventually there's going to be some uptick to neutralize a lot of these. But for now, we're at least not seeing any dangerous signs here where there's still some windows for profit taking amongst some Cardano addresses. Development activity, Cardano is always amongst the leaders here. I'm actually interested to look at where it is in the rankings. You can see very clearly over time, the development activity has been rising. It kind of peaked a little bit here, I guess, about a little over a year ago, but it's still very healthy. And you can see that the daily submission rates regularly get above 4 figures, which is huge. But really quickly, let's take a look at the screener. And if we sort by development activity over the past 30 days, it may take a few seconds, but what this screener lets you do is look at the top development activity, top daily active addresses, volume, price, and you can of course filter based on certain sectors, market segments, all sorts of different things here, funding rate, etc. It's a really, really great feature that I'm probably going to do some webinar on in the future. But for now, we can take a look at development activity over the last 30 days. And very awesome to see Cardano is sitting at #1 right now with about 407 submissions per day over the past 30 days. Coming up right behind it would be Flow, Polkadot, Kusama, Ethereum, great to see there, IOTA, Filecoin, Status, Internet Computer, and Cosmos to round out the top 10. So that just gives you some context as to how solid Cardano's team seems to be. They are constantly trying to innovate regardless of price. And that usually means there's no indication of a rug pull or devs trying to pump up the price and just quickly get out. They're genuinely working on the project, and it goes far beyond just Slack updates and things like that, which we filter through and don't include in our development activity calculation. All right, so that's a pretty good chunk on Cardano there. Let's take 1 or 2 more altcoins if there are some more requests, Balresh.
We have more from the alternative layer 1 front, namely Mina, Solana, and Phantom. Take a pick.
Let's take a look at Solana. Whoops. So Solana is not an ERC20, so we're going to be a little limited in our analysis for it. But we are going to have some social metrics we can look at and some development activity. Let's start with development activity. If we go to all time for Solana, we'll just zoom in a little here. So check out just how much over time Solana's development team has increased their activity. It really peaked here in the late part of 2021 and has declined a little bit, but it's not like they've just stopped developing on the asset. I think on this price decline, they've just had a little bit of a cool down period. But as long as the long-term trend here continues to show a nice rise in development activity, I'd say this asset, which is currently ranked at #9, is continuing to show promise. Let's take a look at the social aspects as well. That's weird that it's saving the emojis from my last analysis. So social dominance can always play an important factor for altcoins. We're probably a little too zoomed out. Let's look at the last year. So yeah, the percentage of discussion related to Solana is looking to be right now pretty low and dormant. We did see a big uptick here in June as prices were rising a little bit, but nothing significant. We would want to look for like these 5% plus spikes, meaning there's 5% or more discussion of all of the discussions related to Solana happening. And that means that it's getting a lot of mainstream attention and usually indicates a big direction change around the corner. But right now, there hasn't been any huge pumps or dumps for Solana. The last one occurred back in early April while a lot of assets were concluding their pumps. But even then, we didn't really see any huge social dominance spike. It doesn't appear to be attracting significant interest at the moment. So this isn't really showing anything special. If we add social volume to it, Yeah, it's pretty much correlating. I mean, the biggest social volume spike occurred in late November, and that occurred around a top, but nothing. It's pretty much neutral right now. And I'd also like to look at just regular trading volume as well. Yeah, it's declining in terms of overall trading value right now. Yeah, trading volume. If we go back a couple years, we can see that the major trading volume peaked in September of 2021 and really just started to fall off a cliff. And it's now getting on a daily basis. So it was at a point where it was at about 17 billion, and it's now sitting at like 1 to 1.5 billion, just to give you some context of how much it's dropped off. So Solana, not much to really update on. It's pretty dormant. Doesn't look like it's attracting significant attention one way or another. If we had ERC20 data on it, I could show you more, like whale activity, but unfortunately that isn't something we have on Santiment as of yet. We are looking to get Solana network data in the near future though, so stay tuned for that. Can we pick another ERC20 just so we don't have to look at only social stuff, Balresh? Sounds good. So Phantom, we do have data on. Circulation has been declining as most altcoins have over the past year. Daily active addresses looking very similar to Cardano, where it's had its share of spikes near tops. So generally, if you are looking to take profit, look for an uptick in price correlated with a daily active address spike like this as a sign that prices are going to decline. But right now, with prices staying pretty flat, not much to announce there. If we look at MVRV, it's about as neutral as it gets right now for the 30-day, but on the 365-day, massive drops. It's the average trading return on the 365-day interval is at about negative 80%. And I believe that should be very close, if not the lowest it's been in quite some time. Yeah, ever. So this decline here has now made it so the average trading returns for 1 year traders is at its absolute seller right now. So that's a very good sign. We don't know what the base level is because it's never gotten this low before, but you rarely see like a negative, 90% plus return for average traders. It obviously can't go below negative 100%. So this is looking like a very good long-term bottom indicator, but we'll just have to wait and see. Age consumed, really nothing. Dormant tokens are not very active whatsoever ever since a mild spike that occurred in the 3rd week of June. Supply and exchanges, it looks like there's been coins actually moving back to exchanges as of late. It really peaked back here in early February before dropping off a cliff and getting super low in early October at 23%. It does look like, compared to a lot of assets, 38% on exchanges is quite a bit. A very large percentage is being kept on exchanges, and that means that this coin is going to be more volatile than most because of the sheer amount of coins that can be sold at the snap of a finger at any point. For context, Ethereum sits at around 10% on supply. Many are well below 10% even. And we see a lot less volatility in those assets because coins are not constantly being moved at a huge rate relative to its overall supply. So moving up more than down, that's generally not a great sign. At least over the past 2 months or so, it's moved down very slightly. But let's look for this long-term trend here to cease and have things really start to look like they're going down for months rather than just a 6 to 8 weeks or so. All right, now let's take a look at whales, see what's going on with Phantom's large key stakeholders. The price is sitting at about 25 cents. So we'll start to look at the 10K, 100K, and 1 million addresses. So the 10K really peaked right around this then all-time high in February of 2021. They dumped a lot while the larger addresses were accumulating what they were dumping. And the red line has stayed flat ever since. The pink line has stayed relatively flat, whereas the gold line ever since last summer has actually grown quite a bit. Now, note that maybe half or even more than half of these addresses belong to exchanges, so these aren't active traders. But it is good to see that ever since really all the way back in late December 2020, there's been an accumulation by the gold tier, the 1 million to 10 million, of about 5.5% of the supply, and they added almost 50% to their bags. So that's nice to see. And also more recently, if we just look at the last month, the pink line here, the 10K to 100K addresses, they've added a mild 2.5% more to their stacks, even though the red line has washed that out, going down about 1%. And even the gold line has gone down about 3%, but that's only because we're counting this very top peak here. Overall, I think this looks better than average. So if we were to just combine all of them together, boom, boom, and boom, hit confirm. So we can see the long decline that started all the way back in mid-September 2021. And then ever since late May, if we combine these three key stakeholder tiers, they've accumulated about 2.8% of the Phantom supply and added overall about 8.1% to their stacks. That's not bad at all. It's certainly promising. And you can see, back when Phantom wasn't doing anything in late 2020 all the way until early 2021, these tiers, they were owning about 50% of the supply at peak and dumped all the way to only owning 33% before they started to accumulate on this big rise. They likely were perpetuating that rise. They started dumping again, and then price declined. And then once they started accumulating, we saw this mini peak, a big drop here, but they held on, eventually dropped off a little bit, but not all the way. And then they really accumulated here, and that sparked the big Phantom bull run that occurred all the way up until September, and then eventually October, and finally in January, even though Bitcoin and Ethereum had declined pretty massively since by this point, Phantom had kind of a second wave, and it was likely due to, if we just zoom in here, it was likely due to the fact that relative to this portion where they were only holding 33%, they were still up around 37% here, so they were holding on to a lot more. And then they really dumped just a day or two prior to this big local top. And it makes sense. It looks like the price does follow this tier pretty well. And considering for the last 6 or 7 weeks, there's been some nice accumulation signs, I'd call this a nice bullish divergence. So great to see on the whale end that there is, a decline in price, but a huge accumulation on the whale end. So I think this is one of the better whale charts that I've seen over the past couple of months. Exchange flow balance, nothing too much to say. There have been the occasional inflows, which makes sense because obviously the supply has been going more up than down as of late. Network realized profit loss pretty much flat as of late. Development activity has stayed pretty flat. I am curious how much per day. Yeah, Phantom isn't getting a ton of development activity per day, so keep that in mind. It's certainly not, showing zeros. So they do have an active team, but it's literally like 1/100th per day compared to Cardano, just to give you some context. Trading volume, like most other altcoins, it's been on the decline for almost the entirety of this year. Mean dollar invested age, looks like dormant tokens are continuing to move. The average age is continuing to move up, with the average investment now up to 230 days. Curious if it's ever gotten higher than that. Briefly, yeah, it looks like back in January 2021, and this was right before the bull run started. And as soon as you saw this big drop, look at what happened to the price. So if I highlight just this part, it's a great illustration of how much mean dollar invested age matters. When you see the dormant tokens move, even just for this short segment of what, 2-3 weeks, that's when prices went up 400, even 500%, depending on when you want to cut off this short interval. So that's massive, and it's a great example of how much this mean dollar invested age metric can really mean. Net ratio of on-chain transaction volume and profit to loss. It does look like there's, so if I highlight 1.0 right about here, it does look like the last few weeks have been seeing a little bit of profit taking, or at least slightly more profit taking than lost transactions. So it does look like the people who are at a big loss in Phantom are just content, and they're saying, I'm just going to hold on to my bags for the long run, while there's still some opportunists who are taking very small opportunities to profit, whether it's because they were invested way back here, or they're just way zoomed in and they're taking like very small profits on the rises like this, which makes sense with this being the biggest bar. Whale transactions, really nothing special going on. And then we already touched on supply distribution. So yeah, that's Phantom. Thank you for the person who recommended that. I haven't looked at Phantom in quite some time, but it's showing some pretty interesting signs, especially with the accumulation from those key whales going on. So yeah, I think we can conclude there. My voice is starting to get pretty raspy, so I'm sorry if there were a few more coins that you guys wanted to look at. But as always, just drop the requests in Discord and give me a tag at Brian there, and I'll be happy to take a quick look and share a few charts based on what we're seeing. Obviously, as I said in the beginning of the call, good sign that there has been a little bit of a breakaway, just at least for a couple of days, with Bitcoin being able to rise despite the fall in the S&P following the consumer index report that came out a couple days ago. Look for some continued choppiness on the equities side, of course, because there's the inflation report said it was like 9.2%, which is higher than expected. So there's still some scariness there, and people are spooked about getting too invested in stocks at the moment. And if there is still some correlation, which there is on the long term between Bitcoin and the S&P, you're going to see that companies' prices staying down are still going to impact Bitcoin's ability to break out a little bit. But if the correlation is starting to show some chinks and be less tight as we saw for the first half of the year, that could be a very good sign for crypto. I would just like to ideally see that the S&P is starting to get some positive momentum itself first. So that concludes this show. I appreciate everyone for tuning in. Stay safe this weekend. Track these charts. Let us know what you see, and we're more than happy to continue some great conversations in our general channel as well as our Sandbase Pro channel for those of you who are Pro members. Cheers, everyone. Talk soon.